Welcome to the class as we look at value-added tax. One more question on value-added tax, adding to a number of questions that we have done, including the discussions. I'm sure we are all on the same page. You know your exempted income, not exempted income. You know those supplies which are exempted. You know those supplies which are zero rated. You know those standard rated supplies. You also know situations where input tax is denied. You know the deemed supplies. You know some adjustments. You know the importation of goods and services. So I want us to discuss and participate. So I don't want to start. I want if you don't mind, let me. I don't want to open the new page. I just wanted to do like we continue on value-added tax. We carry on with the same spreadsheet. When we go to gross income and deductions, we do another spreadsheet. Okay. Yeah. Here we go. I'm sure this is the one. Yes. Is this the question that we were doing? Yeah, this is the question that we did this one last week, yes. So we do this spreadsheet for each topic so that our work will not be very, very crowded. And it's easy when it is vet, you just go back to the questions which we covered on value-added tax. Welcoming you again, those who are joining us today. We'll be looking at question 4.1. Not a very difficulty, such are the questions because we've covered quite a lot. I'm expecting you guys to join in and discuss and ask some questions. Don't be afraid of asking some questions. First of all, let's read what we are required to do, what the question is all about. The question is asking us to calculate the VAT payable by or refundable to Superbody Private Limited for the tax period that ends on 31 March 2024. VAT payable by or refundable to Superbody Private Limited. For the tax period ended 31 March 2024. So it's VAT payable by or refundable. So let's do this. This bracket, we must look at VAT input, isn't it? Input.
Not output.
Let's start with output. Cool. Output VAT. And then input VAT. We divide it like this. We go note by note. So it's a VAT payable. Let's look at the VAT period. Remember, we said depending on the category of the vendor, the other VAT vendors are registered as category A, category B, category C, category D, and category E. Remember, category A and B, it's 2 months VAT period. Then category C, it's on a monthly basis. These are the two categories which we are going to be tested on. We are not going to be tested on farmers who do their returns maybe after 6 months.
So mostly it's A and B.
A, B, and C. A and B and C. Because A and B is after 2 months, but the other one is on odd. The other one is even months. Then category C, it's on a monthly basis.
Oh, okay. So you remember we said A is even number, it's even, and then B we say it's odd, then C we say it's monthly.
B, it's even in numbers. Yeah,
Or
B, it's
B is
even
even.
numbers. C, it's monthly basis. Hmm? Yes.
Okay. So A is odd.
Yes.
I
Like
think
January, March.
yeah, that's where I missed it. Okay.
So this one is it's likely to be category A.
Because it's January,
If it
February,
is,
March. Okay.
yeah, it's just like January and February and March. So you are a tax manager at a firm of tax accountants, consultants, and you are required to assist his party in specific tax matters and to provide tax advice when necessary. You must complete the validated tax 201 return for the tax period ending on 31 March 2024. The following amounts include VAT, where applicable, unless specifically indicated otherwise. So related to the tax period ended on 31 March 2024. Once again, they did not tell us about the number of months,
Yeah,
but
that's
we
what I'm
just
saying.
assume that it's 2 months. When you look at other, they're talking about in February and March, basically it's 2 months VAT period. If they did not actually tell us, that is the most popular. But in most cases, they tell us. So this is the VAT return. The amounts include VAT. Why are they telling us that the amounts include VAT?
So
So
that we
it's
know
for
whether
the
for the
we
purpose
must
of
use
knowing that we must use 115 and 15 and 115.
yes, that's it. So okay, let's start with the local sales. So remember, those who are joining for the first time, if they ask us to calculate VAT payable by or refundable, so VAT payable or refundable, it's simply output VAT minus input VAT. So when you are a registered vendor and you make some supplies, on the supplies you charge VAT of 15%. So the VAT that is charged on the supplies, it's called output. The value-added tax that is charged on the supply of goods and services, it's called output. Then, if the advantage of being registered is if you purchase goods and services from other vendors who are registered, they will obviously charge you VAT. The advantage of being registered is you can claim that VAT that you were charged from SARS. When I'm saying you pay to SARS or claim, I don't mean that you should run with an invoice to SARS. You simply do mathematics, and SARS would understand that they are supposed to pay you on expenses, and you must pay them on what you sell. So you can do your own calculation. It is more like a self-assessment. Those who have done tax 3704, it's more like a self-assessment when it comes to VAT, because you are determining the tax you must pay yourself. So what you should do, you must get those transactions with output tax implications. Then you get those transactions with the input tax implications. Then you get the difference. If output tax is more than input tax, it means you owe SARS. You must go and pay SARS. But if the input tax is more, then it means SARS would refund you. Simple that. So let's start with the sales. I said on sales, that's where you must calculate output tax. So local sales, we know local sales are taxable. So we get 376,800 rand. Remember, this amount, we must calculate the value-added tax portion in the amount. So for us to calculate the VAT fraction on the amount, we are told that the amount excludes VAT. If the amount excludes VAT, the fraction that must be added, the VAT that must be added is simply 15 over 100. Yes. Then we must get our output tax. Those with the calculators, may you please help me so that we are very quick, and then we are able to go and watch the second half of Pirates play.
Yeah, true. And Richard Day, yeah. Okay, it's 49,147.
Yeah, 49. 147.
148, sorry, 148.
148. Thanks so much. That is the output tax. That is the fraction of the VAT that must be paid to SARS on these transactions. Yes.
On your calculation, I think you forgot to do the 115, not the 15 over 100.
Oh, yeah, it's 15. Remember, they specifically stated the amount exclude VAT.
Oh, okay, it's specifically that one. Okay.
Yes, so they said this one exclude VAT.
Okay.
Although the amount they say it includes VAT.
Okay, I think we need to fix that calculation.
Okay, so then you used 15 over 115.
Yeah, so it's 5652.
376,800 multiplied by
myself. I got 56. 520.
Yes, 56,520 rand. That's what I'm getting. Yeah. So be careful, even if on top they tell you that the amount includes VAT. In between, they might try to confuse you. So what you should know, if you are calculating the VAT portion on an amount, if the amount excludes VAT, you simply use 15%. But if it includes VAT, you use 15 over 115. Are we together?
Yes.
Okay, direct exports. On direct exports, what are the value-added tax implications on the direct exports?
The zero rated.
It's zero rated, yes. So remember your examples of supplies. So no input tax, no output tax,
Yes.
Payable. Why? It's zero rated. It's zero rated. So you simply write nil. Interest on overdue accounts. What are the VAT implications? Let's discuss on the interest. So meaning there are some credit sales. So on the credit sales, they were also charging interest. They were charging interest to the clients. So that interest becomes income. Remember, this statement, it's more like a statement of comprehensive income. So yes, what are the tax implications on the interest that was earned on credit sales? Should we claim output tax? What do you say, Ayanda? Remember, it's financial services. There's no output tax here.
Interest is exempt.
Yes, interest is exempt. Why? Because it's financial service. So it's called, let me remove the word no output tax. Claimable, exempt. Why exempted? It's financial services. Which section are you under? Section 2, eh? Yes, it's exempt. Let's look at discounts received. On raw materials. On raw materials. What are the tax implications here, Mr. Tabekul, on the discount that was received? So remember what they mean here. The vendor purchased some raw material. After purchasing some raw materials, they got a discount. So do we have input? Should we claim input or should we pay output tax on this one?
Okay. So you're saying the vendor was buying from us?
The vendor bought some raw materials. And then they got a discount. What are the VAT implications on the discount that they got?
So instead of charging more, we charge less.
The discount, it's more like they've got output tax implications. So they got a discount. You a discount after paying, and then you get a discount, meaning you are paid back. So if there's an invoice, you pay according to the invoice, and then later on they got discount.
Or just like the income side.
Yeah, so it means they must pay when you in the first place when they paid for the raw material. They levied output tax on the complete sales amount. So after paying output tax, they claimed the input tax. Sorry, when they paid, remember it's an expense. They claimed the input tax on the full amount, which was on the invoice. But later on, the supplier say, okay, we are giving you a discount. So a discount would have output tax. Remember, you get from SARS. But on what you get from SARS, you got your money back. So meaning on the money you get, you should pay SARS because you have already claimed it from SARS. How come are you getting more when you have already paid that VAT to SARS? You have claimed it from SARS. So you can't get a double claim. So meaning there's output tax implications on the discount. So it's 4,265 Rand multiplied by 15/115. So what you need to know, I don't want to say quite a lot of things. On a discount, there's output tax implication. You must levy output tax if you get a discount. So get it on your notes. How much is the amount of output tax that is payable? $556. Then bad debts recovered. What are the VAT implications on bad debts recovered? We do what? It's output taxes indeed. Yes, you are right. Remember, you are paying, you are selling goods on credit, because you are registered on invoice. You have to levy output tax. to SARS, even before receiving money. If it happens that you can't recover money from your debtor, it becomes a bad debt. If it is a bad debt, you can claim input tax. After claiming input tax because the debt is bad, if it happens that you kept on pushing and recovered the money, it means you must pay back SARS. It's more like reversing what you claimed on bad debts when you thought that it's going to be bad. Are we together? So there's output tax implications that must be levied on bad debts. So how much is the amount? Oh, but anyway, I don't want it to run. Let me look at the note because I'm seeing a note. Bad debts which has been written off in previous tax periods were recovered during the tax period because they were written off in the previous tax periods. The time they were written off, the vendor was able to claim input tax. So an amount of 850 was recovered from Amohelang Jonas relating to a sale made in February 2022. So yes, we can claim input tax. So recovered from Amohelang. So this one we can pay output tax. It's 850 Rand multiplied by 15 over 115 because the amounts include VAT. So how much output tax must be levied here? $111, 111 Rand. So let's look at bad debts recovered from direct exports. What are the implications on bad debts recovered from direct exports?
Yes, because we didn't pay any tax.
Thanks so much. Yes, you are very right. Remember, all this thing of like you are recovering bad debts recovered, you are paying output. It's because you claimed input tax when it was written off. So if it is an export, the reason of claiming when it is written off, it's because you have already paid to SARS. So when the goods were exported in the first instance, there was no VAT because exports are zero rated. So if a bad debt, if an export becomes bad, a debt on export becomes bad, you are not going to claim input tax from SARS because in the first place you did not pay output tax. Why? Because exports are zero rated. So the reason we simply say it's zero rated. So there's no output tax that is levied here. Okay, we are done with the bad. Now let's look at indemnity payment. Indemnity payment. Note number 2. A fire destroyed some of the company's trading stock. In terms of its insurance policy, an indemnity award of 34,650 Rand was received on 15 February 2024 from the insurer in respect of the insurance claim. What are the VAT implications here? What should we do here? What should we do here? What are the value-added tax implications on indemnity payment received?
I think this is an insurance cash out, a tax payout. So I think we didn't receive a replacement of the stock. We received cash. Then we need to pay the output tax.
Yes, because the cash was received, we must have to pay output tax. Yes, the amount is how much? Uh, 34,560 rand multiplied by 15 over 115. I'm sure the amount is still include VAT. Yes. Remember, when you get an indemnity payment, it's based on market value.
Market value.
Yeah, the real market value which we see, it includes VAT automatically. So you don't have to be told.
You must know. Even
you
if
must
they didn't
know.
say, you know.
Even if they say amounts, but sometimes if they say amounts exclude the VAT, we understand that or maybe because you are taking them from a statement, it was after VAT was screened. It's fine. But here, if it is the market value, but if they were later on, like they were paid the market value off, then you know the market value includes VAT automatically. How much is the amount?
4508.
4,508. 508, yeah. Okay, thanks so much. Mm-hmm. Then what next? We are done with the top part. Then we go on expenses. On the expenses, the purchase of raw materials. What are the VAT implications on the purchase of raw materials? There's no note, meaning unless it's everything, it will be local. It's 126,500 rand multiplied by 15 over 115. So VAT is very simple. So 126,500 multiplied by 15 over 115. 16,500. So just remember, this is input, sorry. This is input. It's a 16,500. There's input tax implications. Remember, it's expenses. Salaries and wages. What are the VAT implications on salaries and wages? Remember, it's an expense. Should we claim input tax? What do you say, Sina? What do you say, Sina? Should we claim input tax here?
No.
So we don't. No. What is the reason, Mr. Tebekulu?
Not an enterprise.
Yes, it's not an enterprise. So it's excluded from the definition of enterprise. Remember, VAT is only accountable when there is a supply of goods and services by a vendor in the furtherance of an enterprise. So there are a number of things that were excluded from an enterprise. For example, a hobby is not regarded as an enterprise, and salaries, like when any rendering of services by an employee to his employer. So those ones are some of the examples of things which were excluded from an enterprise. Remember what an enterprise is. An enterprise, it's a business which is carried on continuously in the Republic. So if you are not carrying an enterprise, if you are not carrying on a business continuously, it's not an enterprise. But however, rendering of services by employer to his employee, yes, it's continuous, but the Act specifically excluded them, like, okay, this one must not be an enterprise. Then we go to fuel. There's no note, but there's fuel. What are the VAT implications on fuel? It's zero rated. It's another example of zero rated goods. I'm sure you haven't forgotten. Motor vehicle repairs. What are the VAT implications on the repairs of a motor vehicle? Is input tax denied or what?
Yeah, in fact, this one I was a bit confused when I last, because I was looking at the definition of a motor car. Yeah, I'm not sure whether this motor vehicle is part of motor car or it's not. But I'm thinking it's maybe actually it's 60%, because it doesn't.
Remember, even though on a motor car, you can still claim input tax on repairs and insurance.
Okay.
Input tax is just denied on purchasing. But when you look at other services like insurance or repairs, you can still claim input tax. Are we together?
Yes.
So the amount is how much? 3,420 rand multiplied by 15 over 115. Uh-huh. 446. That is the input tax that is claimable. And once again, insurance, I've already said it.
Yeah.
Insurance of motor vehicles. Insurance of motor vehicles, the value is how much? 2,500 multiplied by 15 over 115. How much is the amount? $326. Then insurance of motor vehicle purchases. Motor vehicle purchases. Before we go there, there's a note number 3. Sipapali purchased the following 2 motor vehicles on 10 February 2024. and 15 March 2024 respectively. First of all, there was a second-hand single KB bag was acquired for how much? For 60,000 rand in cash. No VAT was payable on the transaction as the bag was acquired from a non-vendor. So what should we do? Should we claim input tax? Remember, I said if all things are constant, you claim input tax on the purchases. But this one, should we claim? Single cab, yeah? From non-vendor. So this one, we call it notional input tax. It's notional input tax. Okay, notional input tax. Okay. Notional input tax. So how much is the national input tax?
So we call it a national input tax because it's a second hand or from a non-vendor.
Yeah, it was purchased from a non-vendor. And remember, it's a single cab. A single cab is not regarded as a motor car.
Yeah,
but if it was a double cab, yes, that's when you were going to say it's a motor car.
Okay.
Remember, a motor car is designed to carry passengers, 2 passengers and above, but not more than 16. So a single cab will only carry 1 passenger, unless you force, and then the traffic cops will stop you.
So now my question is: are we saying is a national input tax?
Yeah.
Is it second hand, or is it because it's from a non-vendor? Which one is it?
It was purchased second hand from a non-vendor.
So okay, so if it was from a vendor,
but new,
but second hand, hand.
Yeah, but this one is second hand.
Yes, but from a vendor.
From a non-vendor.
So my question is, if it was a vendor,
you claim.
Okay, you will not.
Because if you purchase from a vendor, if you purchase from a vendor, obviously a vendor would charge you VAT.
Okay. So we are saying it's a notional because of it's a non-vendor.
Yeah, it's more like a deemed. We name it like notional because no VAT was charged there, but the VAT is there. SARS know for a fact that it was not charged, but somebody who was not a non-vendor did not claim when he purchased because he's not registered. Obviously, he is going to put it directly, indirectly,
as part of the selling price,
to try and recover the VAT which he did not claim from the next person. So that VAT which is hiding, which is charged indirectly, is called deemed input tax or notional input tax. It's not charged directly, but somebody is charging. He is trying to recover the VAT that he did not claim. Remember, 15% is a huge chunk of amount. If you can ask that to the taxi owners. The taxi owners are always complaining like, no, we are buying these combis, but we don't claim. Now, because they are already complaining about that value tax, then they sell it to somebody. They will always regard it as like, no, I want to recover it back. Highly sure, all I'm seeing you've got a raised hand. Just feel free to contribute.
Oh, thank you, Mr. Madonde. If it was a new vehicle or new single vehicle, would it still be notional? I mean, from a non-vendor, will it still be notional?
If a non-vendor manufactures it, there is no VAT to be claimed.
Oh, okay.
If the
All right.
non-vendor manufacture it himself,
Whether it's new or second hand.
If it is new,
Mm.
and then he manufactured it himself, you cannot claim it.
Okay.
There is the notional input tax come into effect because the non-vendor bought it from somewhere and became owner of it. As long as he bought it from someone and claimed ownership of it, and then sell it, it's regarded as second hand because it was registered onto someone's name and then it transferred to someone else.
Okay, thank you, Mr. Matonde.
Okay. So how much is the amount? 60,000 rand, isn't it? Multiply by 15/115. How much is the amount of input tax that must be claimed?
Yeah, 7826.
7,826 rand. Okay, sorry, I'm just 26. I forgot and put it in brackets. Then number 2, we've got Volkswagen Polo. On this one, what are the tax implications? Was used by the company for the transport of goods. The purchase price was 118,000 including VAT. And the vehicle is used in its original condition, meaning it has not been converted into a panel van in any manner. What are the VAT implications here? Remember, this one is a car, it's a motor car. A Polo, it's designed to carry passengers no matter what you use it for. Unless if they told us like it was converted into a van, then you can say on the date when it was converted, there's a change in use of which the vendor would be able to claim input tax, changing from non-taxable to taxable.
So this one is strictly input tax denied.
So this one is strictly input tax denied. Why? It's a motor car. It's a motor car as defined. The amount is 0.
Silas, 8267, what's going on there? Isn't that amount incorrect?
How much?
The 8367.
Oh, it's 7826.
Yeah.
7,826. Thanks so much. Let's not forget, and then we jump some important things and lose marks. We must not forget our statement. Then we've got depreciation. Depreciation. What are the VAT implications on depreciation? What are the VAT implications on depreciation?
Forget the tax. allowance. That's cash.
What is that?
Depreciation is not a cash.
Yes, it's an accounting entry. This one is just an accounting entry. And therefore we said it's not a supply. It's not a supply. It's just an accounting entry on the statement. Discount allowed granted to clients on local sales. On discount allowed, what are the VAT implications? Remember, it's opposite of discount received. So on a discount received, if we said we must levy output tax, then the opposite is true on discount allowed, meaning we must claim input tax. I'm sure we can all agree on that.
Yes.
It makes sense, eh? Okay. I thought you were saying it doesn't make sense. Okay. Multiply by 15 over 115. How much is the amount? Let's calculate quickly. R452. Then bad debts written off. On bad debts written off, what are the VAT implications on bad debts written off?
The same as the one with that gets recovered.
Usually we can claim input tax, isn't it? Because here it's opposite of that one. We levied output tax. So this one we must claim, provided it's not on a situation where input tax was denied or it's exempt or zero rated. Therefore, let's go to note number 4. An amount of 1,678 owing by an export sale debtor in respect of a sale made during January 2020. It's a crazy year. So what are the VAT implications on this one? Should we claim input tax?
Oh,
It's zero rated, isn't it?
Yeah.
It's exports. So meaning no output tax was charged. Output tax was charged at 0. So if you do not pay with the issue of bad debts, you claim input tax, you are just reversing what you pay, what you gave to SARS, because you did not manage to recover the money from your debtor. So here, you did not recover, yes, but you did not charge them VAT in the first place because it was 0. So it remains 0 rated. Let's see what else do we have. Render of computer. Render of computer is 1,430 rand. Multiply by 15 over 115. Yeah. So it's not 0 rated, it's not exempted. Obviously, only an expense we claim input tax. If it is not 0 rated, if it is not exempt, if no input tax is denied, and we know all those supplies where input tax is denied, which are exempted or which are 0 rated. So it's 1,430 rand multiplied by 15 over 115. We are getting 187 rand. Okay. Okay, let me put a rand sign here. Let me put a rand sign here. And we do this, we are done. I'm sure we are all done. If there's anything we might be missing, okay, let's get the subtotal, the total here. Now we don't need the calculator here. What do we get here? Obviously it's VAT payable. Remember, output tax is more than input tax. So therefore it's VAT payable. VAT payable is therefore 61,695 minus 25,737 rand. How much do we have?
35,847.
35?
847.
647.
847.
Sorry, 847. Thanks so much, sir. Thanks so much, sir. Anyone with a question, I'm sure from next week we can move on to gross income, to other topics. Yes, we will do some more questions on VAT when we hold a number of revision class towards the test. We'll hold a number of classes to make sure that we are all prepared. So in those classes, I'll simply give you a questions. The one who does not attempt will not. I'm not going to allow him in the revision. So for you to be admitted in that class, to be allowed in the revision class, you should send me your answer sheet first. So next week we'll do gross income, we'll discuss exempt income. Then the other week we discuss general deductions. And then we quickly do some exercises, the questions which are not very, very difficult. Thereafter, it will be revision during the week or even on weekends until we are all fine. Anyone with a question here? Anyone with a question?
Yes, Mr. Madenda, I have a question.
Yes.
I actually wanted to ask the last line for the rental of a computer. If it was a rental of a vehicle or motor vehicle, are we going to treat it the same way? Yeah.
Of a
Are
motor
we going
car?
to treat it the same way, sir?
No, if it is a motor car, input tax is denied.
Oh, it's input tax denied.
Remember,
you
look at what was paid rented for. If you pay rent on a supply where input tax is denied, or where it is zero rated, or it is exempted, then you don't levy, you don't claim input tax.
Oh, I see.
So
okay.
Thanks
Same
so much.
with the machinery.
Yes.
Same with the machinery. Okay.
So if this one is a computer, we can claim. If it is a machinery and the machinery is not zero rated, you claim input tax.
Okay.
So, but as you said, if it was a motor car as defined, then you don't, because input tax is denied.
Okay.
If it is a microwave, you pay rent for a microwave or a refrigerator, which is going to be used by employees at workplace, then you know that one is entertainment. You are paying rent, yes, but to something where input tax is denied, then you don't claim.
I see. Thank you.
But with this one, with a computer, yes, it's something which is going to be used for making taxable supplies.
Okay, sir. Thank you.
Okay. And as well, while it's on the computer, if there's a situation where the vendor is making both the taxable supplies and exempted supply, for example, it's 40% exempted and 60% taxable supplies. Yes, on the render, we know on the exempted you don't claim. We're going to further apportion by 60%, which would be the taxable supply portion. So you claim to the extent that the asset is going to be used for making taxable supplies. And in this case, a computer is going to be used for making taxable supplies, and input tax is not denied. So yes, we claim. So anyone else with a question? Thanks so much, Mashonolo. That was a good question.
Thank you, sir.
Sina, you can come. I feel like you have got a question. You can feel free. Let's feel free to ask, guys. Let's discuss. It's nice when we discuss. How about Ayanda? Any contribution you would like to make?
No, sir.
Okay, thanks so much, Mr. Tebekulu.
Yeah, I think I'm okay for now. I just need to get some organized how to do.
Okay.
Yeah.
Okay, thanks so much, guys. It was a great class. See you next week when we cover gross income. Next week we cover gross income. On your textbook, if you want to go on and read, I'm sure I shared you the silk. I shared the silk in the group. You go on the topic under gross income. So you need to understand the gross income definition. You know, amounts must be included in gross income first. So you need to understand the definition of gross income, and as well on special inclusions in gross income. So that's what we'll be discussing next week. It's a theory thing. You need to understand this. We'll discuss this in our next class.
Yeah, maybe you can send it in the group and then so that we can read
Yeah,
it.
but
Yeah.
I'm sure I might have sent the silk.
Oh, okay. You
It's
don't
just
have
this.
you don't have separate notes.
But even the notes, the notes do have gross income. So you can run it through the notes, and as well just run it through, and then we discuss it. The other week it will be general deductions. Then we round up with a lot of writing, a lot of exercises. Thanks so much, guys. Thanks so much. See you next week. I will be sharing the recording with you guys. Okay, bye.
Okay, so you're not gonna give us exercise regarding this one, VAT tax, the VAT, or you don't want us to mark it?
For now, I will do. You can. I've answered quite some questions which you can do on your own.
On our
But
own,
as
okay.
well, since next week we're not going to do VAT, I will not be able to mark. I will only start marking you as we prepare for revision.
Okay, I see.
So when we say next week we start some revisions, I give you some questions. Write these questions, please. You are not. I don't have a lot of students. If we are 5, I can mark. If you are 10 like this, I can mark. And then you all attend, because we want us to be more hands-on. Yeah, we do have some more questions which you can do on your own. So these remaining ones and more questions. So this one, I'll make sure we'll do it. It's more like a reversal. I'll make sure that we do it before we write test. It's more, no, it's not a reversal. Sorry, it's not a reversal. I'll look for a question which is more like a reversal. I might have seen it somewhere. Yeah, it's something else. Okay, thanks, guys. You can even do some of these ones on your own. For your practice. Then yes, we can do them. We can arrange, if you feel like we must discuss, let's communicate. We can arrange a very quick class where we'll be able to do it. Okay, thanks, guys. See you next week.
Thank you.
Thanks.
Thank you.
Thanks.